So, changing tack slightly and moving on to our next guest. He's planning to change the way we travel and commute. Very relevant, but also looking to solve two of society's big issues: congestion and carbon emissions, I should say. Has done some successful fundraising to date, is starting a big push into the UK, garnering lots of headlines. So will you welcome, please, Charlie Gleeson of Zipp Mobility, and he is in conversation with Martin Murray from Dublin BIC.
Good afternoon, Charlie. How are you?
I'm very good, thank you. Thanks a million for having me on.
Charlie, it's been my great pleasure to work with you as a consultant in Dublin BIC and to help you on the journey with Zipp Mobility. But if there is anybody out there who has not yet heard of Zipp Mobility, could you introduce us, please?
Yeah, sure. So Zipp Mobility is a Dublin-based scooter sharing company founded only last year in 2019. So I suppose, as many of you know, there is a grey area regarding the legality of e-scooters in Ireland. And with that, we kind of said, well, this actually might be an opportunity for us to, get our ducks in a row so we can actually provide a service when the legislation does change. So while the legislation was kind of grey, we said, okay, well, what can we do while this legislation is how it is? And the solution was to launch and scale on university campuses across Ireland. So that was the initial plan. And I suppose we made good progress. We won a couple of contracts with universities. And then, like a lot of things, COVID struck. And with that, the brakes were pulled. And that's going to kind of, come back around in 2021. But for now, and that kind of all shut off. So I suppose very quickly after that, with COVID-19, the UK announced fast-track legislation for e-scooters. Now, the reason behind that was because public transport capacity was facing a lot of issues due to social distancing. So say 1,000 people could have gone on a tube. That very quickly went down to, say, 100 with social distancing. So the UK government announced fast-track legislation for electric scooters to get people moving in a different way, different from anything they've ever seen before. So the way it worked was they didn't fully legalize electric scooters, but they allowed for electric scooter trials. So each local council was permitted to host an e-scooter rental scheme if they wish to do so. Sorry, I think my speakers are gone. Apologies, I think I lost you there. So each local council was able to issue e-scooter sharing schemes if they wish to do so. So we had a good bit of success over the summer. We won a few licenses, and we're now launching in 7 locations by the start of next year.
Wow, that's amazing. So you're launching in 7 locations, but in the e-scooter rental space, maybe not so much here in Ireland, but certainly in the UK and around Europe, there is huge competition from very, very well-funded competitors, Lime, Bird, people might have heard of and be familiar with. How does a small startup compete with them? What is there in the Zipp Mobility value proposition that allows you to compete with those really big competitors?
Yeah, it's funny. I think a trait that I have, and I think one that everyone on the Zipp team has, is they love being told that they can't do something. I started out reading about Bird and Lime, and I was fascinated by the high level of growth that they experienced and the high level of demand. So, Bird was founded in 2017. Within 2 months, it was valued at over $1 billion, which was fascinating in itself. We saw demand for electric scooters going up as far as 10x that of bike sharing. And we also saw kind of Bird scale into over 100 markets in their first 12 months. So I just thought it was an amazing industry. I thought it was really cool. And the first thing was that, because of this grey area in legislation, I thought this was an opportunity for Zipp and myself to play catch up. But when I started researching the market a little bit, I saw that there were a good few problems with their business model. So first of all, the way they scaled was, into 100 markets per year, and it was great. And they used gig workers to do it, to charge and redistribute the scooters. So this allowed them to scale extremely quickly with virtually zero infrastructure, but it led to huge cash burn. There's obviously the ethical issues with gig work in some cases, with high turnover of staff and things like that. And also the level of growth that they were experiencing meant that they couldn't give each local municipality or council the time they need to ensure a successful trial. So there were incidences of Bird and Lime entering markets and very quickly being kicked out because they were promising one thing and delivering another. Now, I'm not here to kind of give out about competition, but this is where we saw the opportunity. We saw an opportunity for a scooter sharing company with a little bit more, like, yes, we want to scale, but it has an element of sustainability. Now, what we mean by that is, we don't hire gig workers. We've got full-time staff to charge and redistribute the scooters. From a unit economics perspective, this is far more favorable. But also from a sustainability point, we've got full-time jobs and we're creating full-time jobs in the local areas. We also are committed to hiring from local job centres in the UK for our UK markets, hiring the people furthest from the labour market. We're also looking to grow at a slightly slower rate. So we're not looking to go into 100 cities a year. That number is closer to kind of, 5 to 10 in the first kind of 6 months, and then probably 20 per year, 20 to 25 per year thereafter. And with that, it means that we can give the councils the time they need to ensure a successful trial. And it gives us an element of flexibility that is kind of unmatched. As you said, Bird and Lime, they're massive companies. They had a combined valuation of over 5 billion. And it looks like we're going to have a larger market share than both of them combined in the UK market. So we've proved in the last few months that this model works and it's what the councils want. It's really exciting for us to be in this position.
That's an amazing story, Charlie. So, the customers to whom you're pitching in order to win the licenses, they're typically local councils, city councils, and what I've heard you say is that you're aligning the values of Zipp Mobility with their values around the type of workers you employ, the conditions that you give them, and even the pace at which you grow the business is at a pace which they're able to consume, which
Absolutely.
is the difference you have with your competitors.
I think there's a few different things here. Like, people see scooter sharing and they would immediately see the B2C element, but there's also kind of a B2G element as well, where we're going, we have to win license. Well, you don't have to, but the way we approach our business is we want to be as regulated as possible. We want to operate in a kind of a way that, people want us, and we're not just kind of jumping into people's towns and cities and dumping a load of scooters. So, for the licenses that we've won, we've been through formal procurement processes. And in these processes, we've pitched against 15 or 16, in each case, other operators. And some of these, there's Bird, there's Lime, both valued at over 2 billion. At one stage, there was also Tier, Voy, both valued at over, say, 200 million apiece, and plenty more that are much bigger. Some of these competitors, I won't name any, but had over 30 million just for their UK expansion, and we at the time had 300k, so 1% of their budget, and did quite well out of it. So we are operating quite efficiently, and yes, we do really appreciate that. We are, in some cases, some departments in our company are selling to governments and local councils, and others focus on the consumer, and I think it's really important to balance the two.
Very good. So you've won 7 contracts. You've touched on the subject of funding. Obviously, in winning those 7 contracts, it means you need to put a lot of hardware in place, a lot of scooters on the ground. There's a lot of other costs that go with entering into those contracts. Can you tell us about the Zipp Mobility funding journey to date?
Absolutely, yes. So this has all happened very, very quickly. We've been through a few different funding rounds, but essentially it's all been one. It's all happened so quickly. So we raised 50,000 kind of early 2020. And that was kind of someone that just kind of backed the idea and backed that this would go somewhere, taking a punt, essentially. That was to launch and scale on university campuses. COVID happened. We kind of took a backseat. Now, we were talking to other investors as well at the time. And so that meant that and we had built a relationship with these investors. So that means when, the UK announced on BBC that they were, legalizing electric scooter trials, I made like about 5 or 6 phone calls that night, and within about 3 weeks, we had the money in our account. So I suppose it was really important. I really noticed that, building those relationships early for when you execute or when you need the money is extremely important. So yeah, we closed that very, very quickly. So at this stage, so that was 250. So we had a total of 300,000 then going into the summer. We hired a few people to go out and tender for licenses. And then the one thing that we didn't have was actual funding to, put to fund the CapEx to actually roll out a scheme. So when we were tendering for licenses, what we had to do is we had to have enough money in the bank or we had to have enough money committed at least to actually go out and win licenses. So what we did was we went to a number of investors and asked for conditional funding. So we kind of said, if we win these licenses, will you fund us? And they said yes. And lo and behold, we won a few licenses, and then we received an additional 500,000. So that brought us to 800,000. And then we actually, Martin helped us with the application, but we only just found out there last week that we also received 250,000 match funding from Enterprise Ireland. So I'd like to thank Enterprise Ireland for that, and thank Martin for helping us with the application.
Very good, great story, and all of this done pre-revenue. Without having any revenue in place, you were able to acquire this investment, which is an absolutely enormous achievement, because it really, means you have to be able to prove the model without having the revenue to do it. I have a question coming in here, and it's a very relevant one. What did you base your valuation on when raising pre-seed funding?
This is something that I struggled with a little bit. It was kind of a tough learning curve, but at the same time, I think I'll talk you through it. I suppose the first 50,000 that we raised, that was very much based on any comps we could find, and we were already offered CSF from Enterprise Ireland, so that was kind of the valuation that we were coming in at, and that was the only basis. So that was at a 500k valuation. The next valuation, I suppose, was we looked at our competitors and what they raised at their time of launch, and then discounted it. So, for example, like say Voy may have raised 15,000 at a 30 or 15 million at a 35 billion valuation at their time of launch, and then at the time we were raising the 250k, we were in that launch and we hadn't won any licenses, so we discounted that quite heavily as there was more risk, and then we kind of raised, I suppose, a valuation that investors were willing to come in at, if that makes sense. The next valuation was actually a CLN, because again, we wanted to kind of raise at a valuation similar to our competitors, but before we won the licenses, because it was a conditional CLN, again, it was before we won any licenses. We raised it at a CLN, so no valuation actually indicated there. So we have, we've set precedent with caps on our CLNs, but I suppose the next valuation is going to come from the Series A that we're planning to raise and close by March.
Very good. And just in case anybody isn't familiar with that terminology, the CLN is a convertible loan note. So legally, it's a loan going into the business, but you agree that it will convert to equity at some future valuation when you take on the next round. So it can be a very, very good way to take money into the business without having to go through any negotiations about what the appropriate valuation is. I have another question coming in, Charlie, here on the subject of the terms of the investment. Was there any other terms in there that were shocking, surprising, or unwelcome to you that there had to be some negotiations over?
Not really. So I think there were a couple of people like looking for things like non-dilutes and things like that at the start, and stuff that we weren't really comfortable with, and we managed to get out of there. There've been, to be honest, fairly standard documents so far. There's been no big shocks, nothing that we've had to majorly concede on. So I think we've been kind of lucky to date, and I think all of the investors, are kind of trust the business and trust where we're going, and I think largely happy with the terms that we've received so far. I suppose on the convertible loan that we received, the only condition was that we actually had to win licenses, and we actually had to win licenses for a certain number of scooters, which made sense. If we won a license for 30 scooters, it wouldn't really be fair to ask an investor to cough up far more money than needed. So that was the only condition. It was based on the number of scooters permitted on the licenses that we won.
Very good. And I know it's out there in the public domain that you do have one celebrity investor on the cap table now. That's Brian O'Driscoll of rugby fame, which has been helpful in getting some publicity for the business as well.
Yeah, absolutely. It's been helpful for publicity, but he's a very, very smart guy. He's very sharp, and he's also kind of obviously he's led before and things like that. So there's a lot of learnings you can get from Brian.
Very good. Charlie, it's been a great pleasure talking to you about Zipp Mobility. I've really enjoyed working with you. Looking forward to working with you in the future. All the best.
Thank you very much, Martin. Cheers.
We're going to go back to Connor now.
Thanks, Martin, and thanks, Charlie. I love the piece around what motivates us is when we're told we can't do something. It drives us on. Fantastic. And I love the piece from Charlie around the values and aligning the values. That was really good. But you'd have to admire the absolute confidence of, pitching against 15 to 16 operators. They're 2 billion in valuation, and an early stage Irish startup is punching well above its weight. So thank you so much for coming on, Charlie, and continued success.